Good morning, traders. Before we begin, stay until the end because there will be a multiple choice quiz to test your understanding of today's market structure and key concepts. If you find these breakdowns useful, consider subscribing for daily XAUUSD analysis focused on liquidity, imbalances, and structured price action. Now let's start with the fundamental context. Because yesterday was a major event day for gold, which is why we did not trade and there was no analysis video yesterday. We had both PPI data and FOMC rate decision where the Federal Reserve decided to keep the interest rates unchanged. Following that, gold experienced a massive sell-off of nearly $150, and if you see, the whole of yesterday has made almost $300, which is significant even for XAUUSD. This kind of move tells us that the market reacted strongly to interest rate expectations and macro outlook, leading to aggressive selling pressure. Large fundamental events like this often create strong displacement moves, leaving behind inefficiencies and liquidity zones that we can now analyze technically. So today's focus is understanding whether the market will continue lower after the sell-off or begin to retrace to rebalance inefficiencies. Let's break it down step by step. I also want to introduce you to our indicator, which automatically marks your PDH and PDL. You can see that the market has marked, this indicator has marked the PDH at 5016.53 and the PDL at 4806.845. Yesterday's range is extremely important because it was driven by high impact news. The PDL is especially significant as it represents the low of a strong sell-off. If price continues below that level, it signals continuation of bearish momentum. If price starts moving back into the range, it suggests a retracement or rebalancing phase. So you can see that the market took out the PDL and it has moved back in, right? So we now look at the daily time frame and we see it has made a very strong CB here. This is a one-day CB, right? The $300 drop, you can see that the market moved about $200 odd, created a large CB on the day time frame. These inefficiencies are important because the market often returns to them later or to rebalance price. However, after a strong fundamental move, the market doesn't always retrace immediately. Sometimes it continues in the same direction before revisiting these zones. So the key question is whether the market will continue trending lower or retrace upward to fill the daily CB, right? We now move on to the 4-hour time frame, and you can see our indicator now marks all the 4-hour CBs which have not been used before. You can see that it actually moved into a CB and it reacted. So this indicator marks all the unused or unmitigated 4-hour CBs and the new CBs that are formed. You can see that it labels it as 4-hour bear, right? So this was the biggest CB that was formed during the move down, and there were no other CBs, and the indicator has marked it. These 4-hour imbalances act as medium-term resistance zones. If the price retraces upward today, these are areas where sellers may re-enter or price may react or slow down. So these become key levels to watch for potential rejection if the market pulls back. We now look at 1-hour. We're looking at the range that yesterday made, and you can see that it has marked all the unmitigated 1-hour CBs, right? It says 1-hour bear. Everywhere that you can see there was a BC that was formed, but since it got mitigated, it is no longer showing, and it made a new CB and it shows as a 1-hour bear. Here the structure actually becomes clearer for us. 1 hour as a concept, and you can see it's left multiple sell side imbalances. You can see 1, 2, 3 and 4, right? These inefficiencies represent areas where selling pressure dominated the market. If price retraces into these zones, they often act as resistances because sellers may defend these levels again. So today, if the market moves higher, we want to watch how price reacts at these 1 hour imbalances, whether sellers step back in. If price continues lower without retracing much, it indicates a strong bearish momentum and acceptance at lower prices, right? The indicator has marked all of the inefficiencies. However, we need to mark the previous day's volume profile. We will now start with that. So as usual, we go to 1800 of Wednesday, right? This was 1800 until 1600 of Wednesday, right? So this will allow you to mark the value area high, the point of control, and the value area low. Right? We now delete the previous days. After such a strong sell-off, price is often trading below the value area, which means the market has shifted to a lower perceived value. The POC represents the area where the most trading occurred during yesterday's session, and that is reflecting at 4861.2. If price starts retracing, the POC becomes a key magnet where the market may rotate back downward, and you can see that it actually came and tapped it and is now on its way down. The value area low can act as a resistance, which is at 4824. So if price attempts to move back into the value area, be mindful there. And we now consider the psychological levels, and as you can see, 5000 was acting as a very strong resistance level. You can see the number of times, and if you actually go back days, you can see the number of times the market has been retracing and testing this level, though it has now broken that level, right? After this move, these levels become even more important. So we now have multiple of these from 4900 to 4800 and 4850 and all of it in between, right? So if price approaches these levels, rejection can signal continuation, breaks can lead to further expansion. So today's market outlook is due to strong fundamental catalyst of PPI and FOMC, there was a strong bearish displacement. Large imbalances have been formed after this massive sell-off. So today we need to see if it's going to continue lower or it will retrace to rebalance inefficiencies before continuing. So the key scenarios is bearish continuation if price holds below value, fails to reclaim key levels, then the market may continue lower, target new liquidity zones. The retracement scenario is if price moves back into the range and starts filling imbalances, then the market may retrace towards the POC, which it has already done, or the 4-hour inefficiency. And our 4-hour inefficiency is at 4893, right? So in closing, yesterday's PPI and FOMC decision triggered a massive 200 odd drop, $200 to $300 drop, creating a strong bearish momentum and leaving behind multiple inefficiencies. Today, the key is watching whether the market continues lower with momentum or retraces to rebalance these inefficiencies. Stay patient, avoid chasing moves after high impact news, and focus on how price reacts at liquidity levels and imbalance zones.